Well, we got some great news here and real estate market for the Greater Toronto Area. A huge increase from Greater Toronto for November 2024. And we're going to break down all these numbers for me, starting from the Greater Toronto, and we're going to break it all the way out west from Burlington to Hamilton and to the Peel region. We're going to have Vince here too. He's going to be here breaking down some new rules, what he sees coming in the mortgage, and we're going to tell you what we forecast in 2025 from real estate. Hi, everyone. Welcome back to our channel. And if you're new, welcome for joining. And we're going to break down the real estate market trends here for November 2025 in the Greater Toronto Area. I'm Yuri. I work with the Bekavac team here, and I'm a Toronto Street real estate agent. I work out from Toronto all the way west from Hamilton to the Burlington area. And we're going to break down all these numbers. If you want to know exact numbers and you don't want to miss a beat, what's going on real estate market updates, and you want to know any real estate tips, hit the subscribe button below so you never miss another YouTube video or market update on our end. So we go back to the Greater Toronto real estate market for November 2024. We see the huge surge of over 40% year over year for transactions. So pushing almost 6,000 transactions for November 2024. And the average sales price too has rose just about 2.6% for year over year. And the reason we mentioned this is the interest rate cuts, right? The low borrowing costs now. So the reduction in borrowing costs has made home ownership a little bit more affordable for buyers, and it's encouraged them to jump back into the market. And this is why we've seen the sales transaction increase for November. So we're going to break down all these numbers down for you. We're going to start with the Hamilton area, back to Halton, so we'll go Burlington, Oakville, Milton, and then to the Peel region, and give you exact numbers for each of these areas that we're in. So stay tuned. Here we have it, guys. So we have more buyers coming, more demand of buyers in the market than there is sellers, and it's 27% of a seller's market right now. This is a good data we always put up every month to see if it's more of a seller's or buyer's market, and we know more buyers are jumping in with the interest rate cut. The announcement, so they're on the fence. A big jump came in, and this is the Greater Toronto area as a whole. Total new listings have increased this for November 6.6% over last year. It's still a big jump of new listings coming in the market, and I think a lot of people are on the fence. The interest rates being cut, sellers are going to put the house on the market. Total sales activity in the Greater Toronto area has increased a month, 40.1% increase in sales activity for the Greater Toronto area. That's still a big number from last year. You can see the number from 4,100 to 5,800 this year. All right, guys. So Greater Toronto area, detached homes have increased in sales transaction, almost 44% increase from year over year. And the average sales price has increased almost 4% from last year to this year. So you're looking at almost about a $50,000 increase in sales price increase. Semis themselves, an increase, almost 25% increase in sales transactions, and the average price is sold at 1.7% from year over year, looking at about $20,000 increase from last year to this year. Townhomes, there's a sales transaction increase by 46% from last year to this year, and the average price has increased. You can see 0.8% from last year to this year. Looking at roughly just under $10,000 increase, but $8,000 increase from last year to this year. Condos, about 36% increase in condo sales transactions from last year, and we do have a decrease at 2.5%. We're looking at about a $20,000 decrease in sales activity. All right, in the Hamilton area, we see a decrease in new listings over year, a 7.6% decrease from last year to this year. Total sales activity has increased by 7.7% from last year to this year. Looking a little 40 homes more. Average sales price have increased by 3.3% from last year to this year. Looking at roughly about a little over $20,000 increase. All right, so the decrease in the Hamilton area, new listings, 7.6%, is a little decrease from last year to this year. Total sales activity has increased 7.7%. And then we know that it's from the interest rate cut. So buyers are coming back in the market. We see Tell in every area. Average sales price now in the Hamilton area has increased by 3.3% from last year. This year, you're looking a bit of an increase there. All right, detached homes in the Hamilton area. So we see an increase in sales transaction of 6.1%. And we do see an increase in price by 4.1% from last year to this year. We're looking almost a $40,000 increase for detached homes. Semis. Here we go with semis in the Hamilton area. Decrease in sales transactions, 8.7% from last year this year. And we do see an increase in price. The average has rose for the prices for a semi-detached home. You're looking roughly about a little over $30,000 increase from last year. Townhomes. Townhomes right here, 25% increase in sales transaction from this year, last year, 2023 November. And the increase in price has increased by 2.7%. You're looking roughly a little over $20,000 increase for townhomes. The condo area in the Hamilton area, there's an increase in sales transaction, a 4.2% increase from last year to this year of November 2023 to 2024. And the sale has decreased just a little bit, like a $6,000 decrease in condo on the market. All right, so in the Burlington area, we see a big increase of 30.8% sales activities from last year to this year in the Burlington neighborhood. That's a big increase, and we know why from the interest rate cuts announcements that have come out. Buyers are coming back off the fence, and they're coming back off the sidelines into the market. The average sales price has increased also at 10.4% from last year to this year. It's just about a $6,000 increase in the Burlington neighborhood. Okay, detached homes in the Burlington area, we see a big increase in sales transaction, 36% increase, and the average sales price has gone up 7.5%, looking well over $100,000 for a detached home in Burlington increase. Substantial numbers got increased. We know the reason why from the interest rate hikes. Buyers are coming in. Semis themselves, there's an increase, 150% increased transactions, and the average sales price has increased by 12.4%. You're looking roughly almost $100,000 increase from last year to this year. Townhomes, we see an increase in sales transaction, 2.5%, but the average sales price has increased itself, almost $100,000 at 7.1% increase. Condos. All right, here we go. 51% sales transaction increase from last year, this year, and the average sales price has increased by just over 22%. An average sales price is almost well over, you're looking $60,000 for a condo. Okay, the Oakville market. Here we are at 56% increase in sales activity from last year than this year, November of 2023 to 2024. That's a big number. So sales, its average sales price have declined by 0.9% from this year and last year. It's not a big decline much, but it's just a little bit of decline from last year than this year in sales average sales price in the Oakville area. Okay, detached homes in the Oakville area, we see a big increase of 44% of sales transaction from 2023 November to 2024, and 13% increase in price for detached homes, a big increase. You're looking over $200,000 increase in the sales for an average home, a detached home in the Oakville area. Semis, you see a $400% increase in sales transaction, but definitely a decrease in price, 2.8% decline in the actual semis in the Oakville area. So we're looking at a $30,000 decrease in the sales price for semis. Townhomes in the Oakville area, 63% sales transaction increase from last year, and a 10% decrease in sales, average sales price for townhomes. We're looking roughly, it's a pretty big drop, well over $100,000 decrease. Condos in the Oakville neighborhood, 40% increase in sales transaction. What everyone really cares is what the average sales price, but it's 43% decrease in sales for condos from last. That's a big decline. Wow, almost 50% decline in price. That's a huge number. All right, we're in the Mississauga area. 18% increase in sales activities from last year to this year, November 23 to this year, November. And the average sales price has increased by 1.1%, 1%, not much of an increase there. So detached homes in the Mississauga area, increase in sales transaction 23%, and the average price has gone up by 1.9%. Not a big increase, but you're looking at about 30,000 increase in price. It's a bit of an increase. Semi-detached homes themselves, an increase in sales transaction at 20% increase, and the actual average sales price has decreased by 7.1%, declined just under $1 million from last year. So you're looking at roughly $70,000 decrease in price. Townhomes themselves in the Mississauga area, an increase in sales transactions 7.6%, and a decrease in sales 3.3%. Looking at about $30,000 decrease in price for townhomes in the Mississauga area from last year, 2023 to 2024. Condos in the Mississauga area, sales transactions increased almost 18%, and a decrease in the actual average sales price in Mississauga. You're looking roughly over $30,000 decrease in price for condos themselves. Okay, we're in the big city, the hub. Toronto itself, big increase, 39% increase in sales activity from last year to this year, November 2024, 2023. And the average sales price has increased by 2.8% in the average sales price in Toronto. All right, detached homes in the Toronto neighborhood. So we see an increase of almost 48% sales transaction from this year than last year, and almost a 5% increase in price. You're looking roughly almost $80,000 increase for detached homes from Toronto, an average home in Toronto for a detached home for this year from last year in November 2023. Semis themselves, increase in sales transaction 23%, and a 2.6% increase in price. Looking roughly a little over $30,000 increase in semis for this year for a semi-detached home in the Toronto area. Toronto itself. Townhomes in Toronto, increase in sales transactions was 48%, and an increase in sales, average sales price, 5.7% increase, looking about a 60,000 increase in price itself. Condos, let's see what the condos got here in Toronto, in the Toronto market. 36% increase in sales transaction and a 1% decrease in price, looking roughly about $7,000 decrease in price for a condo in the Toronto neighborhood. Well, I hope all that information helped out with the breakout of the sub areas that we've given you. You do have any information, you want more information, sorry, and what's happening in your sub market area, definitely reach out here. We'll get that information for you. That's not an issue. So we're gonna have Vince on here shortly. He's gonna break down what he sees. He's right beside me. We're gonna go through what's going on in basically with the mortgages and what we see in the foreseeable future. All right.
Hey guys, Vince here. Thank you, Yuri, for the introduction. First off, happy holidays. First off, I want to wish everyone happy holidays, Merry Christmas. Hope you're spending this time with your family or spending the holidays with your loved ones. In regards to the mortgage update, let's get started. December 11th was a very big day for everyone looking into the market. There was a 50 bips drop to the rate. Now, for those of you that don't know, 100 bips equals 1%. A BIP is a measurement that we use to measure anything less than 1%. So when the bank says they dropped the rate by 50 bips, that means they dropped it by 0.5%. If they say they dropped it by 100 bips, that means it is a 1% drop, just for those that may be unfamiliar with the term. Moving on, after December 11th, the current rates with A lenders are as follows. An insured purchase being a purchase with less than 20% down and paying for a insurance premium, the rates are between 4.05 to about 4.4%, depending on lender and file. Excuse me, my phone is not on silent, I apologize. And if you are an uninsured or conventional mortgage, the interest rates are looking at about 4.44 all the way up to about 5.00%. Again, depending on lender and the type of file we have working with. Now, the reason why insured mortgages is always a little bit lower than uninsured mortgages is because the banks are willing to offer a lower rate because to them, It's a bit of a lower risk, seeing as they have an insurer on the back end protecting them. When we're talking about conventional mortgages, it's no insurance. It comes to the bank's risk. That's why the rate is a little bit higher. So you're either paying for mortgage insurance premium and your mortgage payments, which is why the rate's a little bit lower down here for insured mortgages versus conventional uninsured. There's no mortgage insurance premium. The rate is a little bit higher because the bank sees and file as a little bit more risk because they are an uninsured product. I'd also like to mention a change in the regulation back in November that I feel like is quite overlooked, and that is the process of switching mortgage providers without a stress test. What does that mean and how does that affect borrowers? Well, first off, a straight switch is when you take your mortgage from this institution and you put it over here with this institution. Nothing changes regards the term, the amortization, or the amount. The only thing that changed is who owns your mortgage, whether it's TD to Scotia, whether it's RBC to CIBC. The term, the amount, the amortization all stay the same. Now, why is this so important? It's important because as a borrower, you have the flexibility to go to whichever lender gives you the best service, the best rate, or who you're most comfortable with, right? Qualifying without the stress test makes it much easier for you to pick and choose who you would like, especially if your renewal is coming up. That means you can straight switch from one lender to another without any fees or penalties. Now, again, this is only for those that are switching mortgage providers. If you do plan on taking an equity takeout, or if you plan on increasing your amortization, this does not count as a straight switch. So again, if you are looking to switch mortgage providers, stress test free, then you must keep the amortization, the term, and the loan amount the exact same. Hope that helps. Now, my last point I want to mention, and I'm sure you've heard of me say it multiple times, and you probably heard it on the news too, but I find it's very important. It's a big change, and I think everyone should be well informed to take advantage of it. As of December 15th, the changes to the mortgage qualifying will be introduced. The first change is increasing the cap from 1 million to 1.5 million. Excuse me. What does that mean? That means right before the 15th, if you were to purchase something at $1 million or more, you have to put down 20%. After the 15th, that cap, that limit goes to 1.5 million. That means that if you were to buy something at 1.5 million, you can put down the minimum down payment possible. What's the minimum down payment? Well, fortunately, they didn't change that calculation. And for those that have seen our previous videos, you would already know, but don't worry, I'm going to review it one more time really quick. The way down payment structure is broken down is the first 500,000 is 5%. The remaining from 500,000 to purchase price is 10%. So in the past, if you wanted to buy, before the 15th, if you want to buy something at 1.5 million, you would need a minimum down payment of 300,000, which is 20% of 1.5 million. With the new updates to qualifying, buying something at 1.5 million would only require a down payment of 125,000. Big difference. That's less than half of the required down payment before the changes in the qualification standards. So again, 300,000 before the 15th, $125,000 now. It'll help a lot of people if they don't have that down payment ready, but they do have a lot of income and qualify for a large mortgage amount. That would help significantly. On top of that, the GTA, the market that I'm in, 1.5 million cap would really help get people into the market and consider that they don't need that 20% to purchase something that they're ready to move into. The next big change happening on the 15th of December is regarding amortization for first-time home buyers. Before the 15th, the maximum amortization for insured file or insured mortgage for a first-time home buyer was 25 years. After the 15th, that amortization is going to go up to 30 years. Really quickly, what is a first-time home buyer? A first-time home buyer is defined as someone who has not owned any real estate within the last 4 years, or someone that has experienced a recent breakup or divorce from a marriage. As a first-time home buyer, this really helps you qualify for that mortgage you may be looking for, right? 25 years versus 30 years really helps your borrowing power and how much you can borrow. And on top of that, it creates that level of financial security by lowering your monthly payments. Yes, there are some of you out there right now saying, but if you have 5 more years of the mortgage, you have 5 more years worth of interest. Yes, that is true. That is the cost of borrowing. But as in my previous videos, I'm sure I've shown, if you use that money you save and you put it towards a monthly payment, or you save up that money annually and you put it to a lump sum payment every year, you can actually reduce your interest rate by almost, your interest cost of borrowing by almost 3 to 4 years, bring that 30-year amortization down to about 26 and a half. So again, 30-year amortization for insured first-time home buyers, and the increase of the cap from 1 million to 1.5 million is incredibly good news for anyone looking to get in the market. If you guys have any questions about the changes or how it affects or benefits you, please reach out to me or Yuri. I would love to talk about it a little bit more.
Well, I hope that was very informative of you and Vince walked you through. And listen, if you guys don't have a mortgage broker, remember level two, definitely reach out. Vince will help you out. If you're looking for a renewal too, definitely he's the guy to reach out. He can definitely help you out there. And Vince, everything you walked through, what impact do you see, all the great information you gave us, that you see happening foreseeable future for next year?
So I think it's going to be a great impact. I think it'll be a little bit slower than what people anticipate, mainly just for the education piece, right? Not a lot of people, I feel like, understand how these changes can affect them, especially first-time home buyers. I find that they're a little overwhelmed with the process. Big changes like this may or may not be easy to understand. So I would love to explain to anyone a little bit further how this may affect their application. For the most part, it is a positive impact, but I take this opportunity and time to educate people, to explain to them how it affects them and how it can benefit them if they use it correctly. So Yuri, my turn to ask you a question. With the understanding that the winter market is a little bit slower than most, seeing as the holidays and it's colder, do you think that the current rate changes and the current changes in the mortgage market, are they going to have a bigger impact in the spring versus what we're feeling right now?
Great question, Vince. Absolutely. I think it's going to be like a springboard. Boom. It's going to take off. I think the spring market's going to really take off next year. And if you're a buyer on the fence, like we kept saying, last couple times in our real estate market update here, Vince, we said get back into the market. I think you still have some buying power, but yeah, I think the spring market's going to take off next year, in my personal opinion. Don't hold me against it, but usually we're pretty much correct what we're saying. And I do see a big spring in the market. Absolutely.
Yep.
Well, guys, I hope that all this is informative. It does help you out. If you're on the fence, if you want to reach out and you have some more questions, we're here. We definitely love to help you out. And if you're new to the channel, hit the subscribe button so you don't miss any real estate update, any real estate tips of what's going on, and you're always informed of what's going on for the foreseeable future. So thank you for tuning in. And from Vince, myself, you're in the Bekavac team, and we'll definitely reach out to you. And happy holidays, and we'll see you in the new year, right?
Merry Christmas, guys. Happy
Merry
New Year.
Christmas. Cheers.